So third question: the Indian economy has a particular feature that while the banking sector is not growing well, well, and it is affected by with NPA, high NPA, the stocks of banking firms firms and are stable, and Indian economy has not faced any banking runs or crisis in recent years. Examine. Important question it is. Copy. Okay, Indian economy has a particular features when the banking sector is not growing properly because affected by the high NPA, non-performing asset in the banking system. How to stable Indian economy? Because it is increase in NPA. Examine. So hence, what is non-performing asset? When borrowers stop paying interest or principal on a loan, the lender will lose money. The, so when the borrower stops the paying interest or principal on a loan, the lender will lose money. Such a loan is known as non-performing asset. According to RBI, then an asset including a leased asset becomes non-performing when it ceases to generate income for the bank. Banking sector is affected by NPA. India's public sector banks and their increasingly worrisome balance sheets has been a subject of concern for over the last year. Has been a subject of concern for over the last year. Economics Economic survey pointed out that decisive resolution of the loans concentrated and the large companies have eluded successive attempts at reform. Economic survey pointed out that the decisive resolution of the loans concentration in the large companies have eluded successive attempts at reforms. Post demonetization, this problem has continued to fissure. NPA keep on mounting while bank credit and private investment continues to fall at its current level. India's NPA ratio is higher than any other major emerging market, with the exception of Russia. Major corporates, particularly powerful conglomerates, amassed huge debts owing to a combination of misfortune, miscalculation, and over ambition. Mining ventures were hit by slumping commodity prices, and bankers' optimism on infrastructure projects turned out to be hugely optimistic in bureaucratic India. In India, despite NPA being a major problem, the recent outlook by regional rating agency Moody's gave a stable outlook to the country's banking system. This is happening due to the ongoing process on asset quality front and on better operating environment. The outlook for the banking system reflects a stable operating environment and improved prospects for asset quality, among other factors. Ongoing progress in managing legacy asset issues of offsetting the significant capital shortfalls. So some banks continue to face. Government support will remain strong for public sector banks despite a reluctance to bolster bank capital. Profitability remains low, but it is improving. Lending margins will be stable due to a drop in funding cost. Concern, however, deteriorating asset quality in agriculture and micro, small and minimum sized enterprise (MSME) portfolios pose risk way forward. The creation of a bad banks. The economic survey proposes the creation of PARA, that is the Public Sector Rehabilitation Agency, that would work out the largest and most complex cases. Associated concepts The above phenomena was also called balance sheet syndrome with Indian characteristics. The term balance sheet syndrome with Indian characteristics was mentioned in the media economic analysis 2015 by the Ministry of Finance and was elaborated in Economic Survey 2015. Here, the balance sheet syndrome refers to the worsening profit scenario and mounting losses of private sector, especially corporate losses by the corporate discourages future investment, and in this way, the economy suffers. The balance sheet problem of rising debt and losses occurred in many other countries, especially in advanced countries in recent years. The balance sheet problem of rising debt and losses occurred in many other countries, especially in advanced countries in recent years. But in India, unlike in Japan and in the US, the problem has some unique features, and hence it is a balance sheet. It is a balance sheet syndrome with Indian characteristics. In Japan, there was a balance sheet problem after the real estate and equity boom of the last 1980. Similarly, in the US, there was a balance sheet problem after the regional financial crisis, and the economic survey elaborates three reasons to show why the syndrome is distinctively Indian. First, India is not suffering from recession or stagnation. In Japan and in the US, there is a succession. Second, there is a recession in Japan and the US. Second, in India, there is no weak macroeconomic demand. Rather, there is a moderately strong demand. Not no weak macroeconomic demand. So rather, there is a moderately strong demand, at least relative to supply, reflected in moderately high inflation and a moderately high current account deficit. On the other hand, in advanced countries like US and Japan, demand is poor. Their third, perhaps even more distinctively, the Indian balance sheet problem has partly due to private sector investment in infrastructure, that is the so-called public-private partnership PPP model. This was because of the public sector was reluctant to actively intervene in infrastructure projects. What are the reasons for balance sheet syndrome? There are five reasons for the balance sheet syndrome. First, the first is weak profitability and high burden of debt for the private sector. Weak profitability and over indebtedness discourages investment by corporate in India. Second, called stalled projects and inadequate bankruptcy procedures. Third, failed PPP models has contributed to losses in the private sector. Fourth, many PSBs have financed several infrastructure projects, and stalled infrastructure projects had resulted in large volume of stressed assets in bank. If the PSB are now not ready to give loans to the business sector, fearing penal actions for managers in the context of rising NPA, it further stalls projects by the corporate. What is painful about the balance sheet syndrome discourages private investment. The balance sheet syndrome with Indian characteristics creates a web of difficult challenges that could hold back private investment. Private investment must remain the primary engine of long-run growth. The survey observes that because of this balance sheet problem, increasing capital flows will not be converted into real investment in the private sector. How to escape from the syndrome? Public investment overall is necessary to escape from the syndrome. To revive growth, public investment, especially in the railways, will have to have an important role to play. So next question is next time we discuss. So thank you. So here important thing is balance sheet problem. Increasing capital flows will not convert it into real investment in the private sector. So public investment overall is necessary to escape from the syndrome. To revive growth, public investment, especially in the railways, will have to important role play. So here is some of the important what are the reasons of balance sheet syndrome. So weak profitability, high burden of debt in the private sector, weak profitability, stalled project, inadequate bankruptcy procedures, failed PPP models, contributed to losses the private sector. Many PSB have financed several infrastructure projects and stalled infrastructure project has resulted in large volume stressed assets in banks with the PSB are not now not ready to give loans. The bank, okay. So here Japan balance sheet problem. Japan there was a balance sheet problem. 1980 US in US again financial crisis. India is not suffering from recession. No macroeconomic demand. Thank you.